I run a firm called Alleviate. We go in, we alleviate the problem, we collaborate with stakeholders, internal, external, and we create some value for our clients. And that could be a number of things. What we're going to talk about today is cash flow management. And I apologize, I'm using Canva for the first time. So we've gone through a little bit about this in my background anyway, but basically we run a full CFO advisory firm, everything from bookkeeping to full-blown interim CFO services. I can provide everything in between. So that's a little bit about my background, which again said the experience we've sort of talked about. Thought for the session today, there's this one and the one, my favorite. So this was the fact is that the earliest lessons learned in business was the balance sheets and income statements are fiction, cash flows reality, right? When you work in the distressed space, you don't actually care about the P&L. I really care about the balance sheet other than what the bank balance is. And I just want to know how much money is coming in and going out. And I'll give you some examples of that during the course of this presentation. There's a few slides in here, but I'm probably going to skip some, and I'm not going to necessarily follow the content as it appears on there, but you will get the gist of it. My favorite is revenue is vanity, profit is sanity, cash is king, which is a more commonly heard term for a lot of people. I worked for 15 months at a large logistics business. I won't say which one because it's blatantly obvious. And what they said to me was that we work for $1 billion company. And I said, right, so what's that? $1 billion turnover. I said, how much money do you make the bottom line? We make about $20 million. I said, I work for $1 billion company. I used to work for $1 billion company that made $180 million. That's after depreciation. I said, so please don't talk to me about $1 billion company. We really only want to know how much money you make at the end of all of that. So cash is absolutely king and revenue is just vanity. So anyone that talks to you about revenue, talk to them about cash. Keeping the cash flowing, there's 5 principles, right? So without cash, your business won't survive. You can actually make no money. You can make no profit in your business and still survive for a period of time, right? And I've proven that at All Trades Queensland. We survived for 2 years. At the most recent business that I'm in, we survived we still survive, and the business only started making profit last year, right? So it is possible to survive without actually making any profit. You do need to understand your cash flow drivers. So what drives cash in your business? And then you need sort of, managing those cash flows and the processes. You need to treat the symptoms, right? So you need to understand where the problems are before they actually arise. And then you need to be prepared to make changes, right? The biggest problem you have when it comes to managing your cash flow or managing the tide to turn the tide is actually changing the process, right? The first step is to recognize you've got a problem, right? Like I work with a lot of boards as well, and 9 out of 10 times, private equity funds the greatest at this. They don't recognize they've got a problem until it's too late. And then they go, oh shit, we need someone to help us. By then that runaway has become smaller and smaller and smaller. The recognizing that you've got a problem is fantastic. That's your first step. And you have to make some changes. There's a lot of advisors out there that will turn around, that will tell you that, you know what, this is what you need to do. Your accountants are the best at doing this. They look at your financial statements and your cash flow and say, hey, you got to do these things. And then they leave you to it. Well, if you make all those changes yourself, sometimes you would have done it, right? Sometimes you need someone to be able to come and execute. All the planning in the world, all the thinking in the world about changing something is no good unless you actually go and execute. So that's one of the sort of the principles around that, around managing your cash flow, is that you've got to recognize that there's a problem. You understand how you're going to fix it, and then you have to go ahead and fix it. What we're going to talk about today is basically the difference between profit and cash. And I apologize if I go a little bit too fast. I'm conscious that this probably has to end at 8:30. So anyone wants to talk about this afterwards, happy to take a conversation offline at another time. So you need to understand your working capital cycle, your cash conversion cycle, and then you need to plan for cash flow improvements. The one that I will touch on before we finish for sure is the 8 causes of poor cash flow. There was actually 7. I've added number 8 in there because in my last 3 experiences, that 8th one is probably the most important, and I won't ruin it for you guys yet. Profit doesn't equal cash. Those some of the things in here that impacts cash, right? So GST, it's a cash impact, not a profit impact. Loan repayments, cash impact, not a profit impact. Interest on loan impacts both. Cash spent on assets doesn't impact profit, impacts cash. Cash received from sale of assets actually can impact profit because it's a gain, but it's a false gain, but it definitely impacts cash. Depreciation impacts profit, doesn't impact cash, right? So it's important to know that just because you've got an EBIT number of X or net profit after tax of negative doesn't mean you don't have positive cash. If you're a private equity fund, you're loaded with debt and that interest just accrues because you're never paying it, you'll never make a profit. And you're not paying that interest out. It just gets added to your balance sheet. They'll never make any profit, but you'll still have cash. Does that make sense? Working capital cycle. The link between profit and cash is timing, right? You sell something, you'll get an invoice. So you'll send an invoice for it. And at some point in time in the future, you'll collect that cash. If you're really good and you've got them on an auto pay, direct debit, or something along those lines, then you'll collect it within 7 days. But if you don't manage that process very well, that will just extend out and out and out and out, right? That's key. Then if you were a manufacturer, right, you got to purchase the stock. At some point in time, you're going to pay for that stock. You have to manufacture it, right? So you might have to, if you're a manufacturer, you'll have to convert that stock into finished goods. You will then sell it at some point, and then you'll have accounts receivable, and then you're going to collect the cash. When you purchase the stock, you probably have to pay for it within anywhere between 7, 15, 30 days for most people. But by the time you convert it, you sell it, you get accounts receivable, you collect the cash, it's probably 50, 60, 70 days. So that difference between when you actually had to pay for that stock or the raw materials to when you actually collect the cash from selling the converted, that's your cycle, right? And you got to manage that. If you don't, that's where you lose money. So it's a bit of that, the cash conversion cycle, right? So we talk about buying stock, and let's just say that in 35 days, you've got to pay the supplier, so that's cash gone. You're converting that stock, and then in 65 days, you sell it, and then 110 days, you receive payment. So the difference between 35 and 110 days is your conversion cycle, okay? The smaller that cycle, the better it is for your cash flow. Easy. I go into a business, and the first thing I do, I stop people from making payments other than to wages and super, and that's it. Everyone else just goes on hold. I don't pay them until I've done a thorough review of the cash flows of the business, and I go hard on accounts receivable, right? Because that's the opportunity to collect cash quicker and pay out cash later. And that's how you manage your cash flow, right? Or as one of my bosses calls it, the shell game, right? You're juggling every day. When I was at All Trades, I was managing cash flow by the hour because I'll have all our clients paying sort of during the day, during the week, and daily and whatever else. And I have to make sure I've got enough cash to be able to pay payroll to 400 apprentices on Friday morning. And if you don't, there'll be F words flying at receptionist, and payroll will be in tears because some snotty 17-year-old thinks it's, I'm overprivileged and I should get paid right on 7 o'clock on Friday morning. And if I don't, then I'm not going to work. And that just puts unnecessary stress on the business, right? But that's how you sort of manage it. The shorter the cycle, like I said, the better it is for your business. A lot of the cash flow crisis is managing that. So one of your first things is looking at all of that sort of cash flow conversion cycle and shorten it. Just be aware, you only get one opportunity to do that, right? It's not like I've made a $50,000 improvement in my cash cycle and that's going to happen every week or every month. It's a one-off change, right? So once it's there, it's there. So if that cash conversion cycle is really long, you've got one opportunity to shorten it. I won't really go through this work example other than to sort of say, well, you have an opportunity in this particular example. And again, I'm happy to run through this with someone on their own business if they want, right? But if you reduce it in this particular scenario, if you reduce your debtor days by 9 days, which isn't that hard to do, right? It's actually not very hard to reduce your debtor days or reduce your inventory days, right? Actually just walk around your plant and your stock and just go, how much stock am I carrying here? How much do I need to carry? How many units do I sell every week to ensure that, okay, if I sell 20 units every week, why am I buying 30 units every week? I should be buying 20 and I shouldn't buy it until it gets down to 5 because I know they deliver within 2 or 3 days and I'll get topped up, right? Like it's having those types of discussions either with your team or with yourself and go, do I really need that much stock sitting here, right? And converting that stock is a one-off opportunity to create cash because you've already paid for it. Don't forget, if you bought the stock, you've already paid, money gone, right? I have clients in there goes, oh, but it's money gone. It's cash is gone, right? You might as well liquidate that. And even if you sell it for half price, it's cash generated. 4 actions needed for a sort of an improvement plan is that understand your cash flow better. So prepare a cash flow forecast, right? I have a manual spreadsheet, right? And I can do a sophisticated spreadsheet. I have a manual spreadsheet. I have my team basically put in there what they forecast to collect in cash out of invoicing every week. And then based on that, that dictates what I pay in that particular week. And I have a manual. I have a very, very large spreadsheet because I've been doing it daily since I started there 2.5 years ago. And I literally go in there and drag and drop. I hold my creditors on one side and I drag and drop when the invoice is going to get paid. That's the only way we can understand how cash works in our business because we don't have a regular flow of cash necessarily to be able to make the payments as and when they fall due. It sort of says you'll build your cash flow into your accounting or reporting software. So most people have some form of forecasting tool that they use. Xero is very basic. So Fathom, Spotlight reporting. I use a tool called Modano for my bigger clients. They all have that. And then we put our actuals in there so we can actually measure it to see how we're actually performing actual versus the forecast. And that's important. And then once you said, you put a cash flow improvement plan. And I think most of the people in the room will understand SMART goals. So set those very realistic goals of achieving. So if your debtor days is sitting at 30, but your agreement with your customers is supposed to be 7 days, right? So put a plan in place to go, well, I'm going to get this down to 14. Go look at who your tardy customers are and get them to pay. The last one I actually believe is a bit of a pitch to try to pick up more clients, right? It's independent to hold you accountable. As long as you can, put some pointers up, put a board up to say, this is what I'm going to get to. You need to just hold yourself accountable, right? You hold yourself accountable, you'll get somewhere, right? You track it, you make a change. It's that simple. Unless you track it, you're never going to make a change because you have no idea. The moment you start tracking something, your brain automatically starts fixing it. It's human nature. I think most of these people, most of you guys will know that, right? You're experienced enough. You've in some form or another have done that. So the 8 key causes of poor cash flow. So let's start with a 7. I'll get to number 8 and I'll probably spend a bit more time there. Accounts receivable process, right? So make sure you have a proper process to say, okay, well, customers know by when they need to pay. Put them all on direct debit if you can, right? Or do what I do for my distressed clients. I send you the invoice on Monday, you pay me on Monday, then I do the work from Monday to Friday, right? Because if it fails on Wednesday, if the company closes on Wednesday, I'm not paid, right? 90% of my clients that I work on, I'm sorry, you pay me on the day I send you the invoice, right? And I don't pick up anything to do any work unless I'm paid. But that's a sector I work in. The manufacturing business I work in, some customers pay 45 days from end of month, right? But guess what? The top retailers in Australia, take it or leave it. They don't care, right? So you just have to figure out a way around it. But you need to get that process right and you need to follow it. Accounts payable, same, right? Absolutely take your suppliers to the brink. Don't pay anything until they send you 3 notices. Don't pay anything. I don't, right? They got to ring you 2, 3, 4 times. They got to send you a bunch of notices before they go to legal, then you pay. Now, some suppliers, that they're like me, they won't do any work for you unless you pay. So you got to manage that process, but you've got to stick to it, right? Somebody sends you an invoice today, don't go in line and pay tomorrow. Because don't forget, if any of your business or your clients have an overdraft facility or a loan or a redraw facility, you want cash in there to reduce your interest payment. No point paying somebody anytime before they need to be paid. Inappropriate debt and capital structure, okay? Don't go get On Deck or Shift, Get Capital, or any of those commercial payday lenders. I'm just looking at one right now. I'm doing a restructure for a client. They pay 45% average interest rate. They never pay it off. Because you're only paying $500 a week or $1,000 a week, it doesn't hit you. And you never realize. All you're doing is paying off interest. So never do it. There's far better ways of doing it. The ATO is the best place to go and get money, right? You can actually go online and within 5 minutes, you can get a 12-month payment plan at 10% interest without talking to anybody and therefore feeling embarrassed that I'm about to rip off other taxpayers. You're not ripping them off, right? You're legitimately using a facility the ATO allows you to do as long as you pay them back and as long as you talk to them. Daveen's looking at it like as if it's a serious debt facility. It's not, but it's a payment plan that you can then use the money that you would have paid for GST, PAYG, etc., to fund your business and go on a payment plan to pay them off over 2 years. I've been doing that for a client for the last 2.5. They're pretty good that way. Your overheads are too high, okay? All Trades Queensland was in $1 million facility and half of its rooms were empty. Why? Because the training college needed classrooms, but we never filled them up. Well, you needed classrooms. Well, no, these days you just go on site and deliver the training. Oh, no, but we can't do that. So you're just paying rent for no reason. Another business I'm in, we use 1/3 of the facility and we pay $3.5 million in rent over the year. So got to look at those overheads and go, do I need it? Do I need a full-time sales team? Do I need a full-time IT person? Do I need a full-time finance function? Right? You don't always. And there's options out there. So look at your overheads to see if it's the right size or not. Your profit margins are too low, right? You go to your accountant and goes, you need to increase your pricing. Yeah, that's easy. And then the customer walks out the door because you're too expensive. I'll go somewhere else. So you need to work out how do you actually increase your margin, right? So how do you get more efficient in doing that work? If you're a manual manufacturing process, how do I automate, right? How do I go from 24/5 to 24/7? Or do I need to put in, a nighttime shift so I can utilize my asset a lot more and therefore decrease my cost of goods sold? You need to start looking at that. Obviously, sales are too low. right? Don't forget, you've got a level of fixed cost that you cannot go away from. If you employed staff, you've got to pay for them regardless whether they do an hour's worth of productive work or 8 hours worth of productive work, right? You have to give them 8 hours of productive work. If you don't give them 8 hours of productive work, it's not their fault. So you've got to have a level of sales that needs to sustain your business. And then you need to get more than that to make some profit, right? Now, my favorite, misguided use of available cash. If you're a director of your business and it's a company, or you're operating out of a trust, it's very hard to justify this one when you're a sole trader. But the money that comes into the bank account of the company is not your money. It's the company's money. The company has to pay all of its debts first, and then it can pay you a wage or pay you a director's fee or pay something else. If you're a director of that company, it is wrong for you to take money and go buy a boat or a yacht or a V8 ute, Land Cruiser, six-wheeler, right, that you've just cut up in the back and put a tray on it, right? It's wrong for you to do that if you can't pay your super on time, okay? Absolutely wrong. And it gets done over and over and over again. Most businesses that have a debt with the ATO and are on a payment plan have probably at some time ripped the money out to go buy a truck or a house or something. And trust me, in the middle of COVID, rampant, because everyone's getting JobKeeper. Banks don't want you to pay money right now. Rent is put on hold. You still have to pay it, but let's not worry about that. Let's worry about that down the track. And then all of a sudden, interest rates start going up and a whole bunch of other stuff, and it causes you problems. So that's your sort of 8 key causes of poor cash flow, right? You have really bad receivables process because you're not collecting on time. You're probably paying your payables too early, or you're not processing your invoices. Your inventory process, you're overstocked. You've got way too much stock in there, and that's not right because that's holding up cash. Your debt structure is not great. You've got too many overheads. Your profits are too low, sales are too low, and all the money that came into through the till, you've gone and bought yourself a four-wheel drive. There's 8 more slides that explains all of that, but I'm not going to go into it. That's pretty much sort of a very fast version of managing your cash flow. The key to remember out of all of this, guys, is that you want, even if you're not challenged, right? You just get into the discipline of, I want to collect cash as fast as possible and I want to pay out as slow as possible, other than to your employees and super. You don't pay your PAYG on time, you go on a payment plan, doesn't matter. Super and employee entitlements, first and foremost. Don't take your salary if you know that you can't make your super payments, because you're the owner of the business. Leaders eat last, right? Sure, everyone's heard of that one, right? You need to go hungry, that's fine. Don't take it out of the mouths of someone else that works really, really hard for you, 40 hours a week, right? But everybody else, they can wait. Your biggest suppliers, you might think you've got to pay them first, but your biggest suppliers have the most at risk by you going under. Why? Because you owe them a bucket load of money. If you go under, they're not going to get anything. So they will support you. Absolutely will support you. My biggest supplier at the moment is on 65 days officially from invoice. I currently pay them 100 days from invoice. At $100,000 a week in invoicing, right? That's $500,000 almost extra cash that I have in my business, one off, that I didn't have to part with right now. So they support me. Your biggest suppliers will support you. The ATO will support you. Anyone that says ATO is not going to support you is lying. If you talk to the ATO, you arrange a payment plan, and you pay when you're required to pay, they will support you. But it's about making a plan, executing on the plan, and sticking to it. And if you can't stick to it, go talk to them. Anyway, any questions?
Oh, we got Ross. Go ahead.
Yeah, great presentation. Love it. Just regarding the cash flow and that debtor finance, where do you sit on debtor finance for business, or ways to, instead of doing debtor finance, what do you suggest?
Debtor finance is really good because it gives you a one-off change, right? It gives you so if I had and I did have a 400 debtor book that was waiting, that's a one-off change and get 400 grand out of the 500 in straight away. That's fantastic. But the longer you take to pay that down, the more interest and fees you're going to pay, right?
Yeah.
So no one's going to give you an overdraft facility to that size. So if you're depending on the size you need, OD might be easier. Debtor financing is good, but the fees and the interest kills you. The compliance piece is quite stringent. I've got it because our business needs it. If I had a spare $1 million, then I wouldn't have a debtor financing facility. But if you don't, it does work, but it's not cheap. But is a heck of a lot better than on deck, shift, and get capital. Like any of those shark loans, the commercial shark loans that will give you money in 5 minutes, it's better than that, right? And if you collect quickly, the amount of interest you pay is actually very low, right? So they do have regular fees. So you might not pay any interest at all because you collect really quickly, but you've still got the fees that you've got to pay. That's probably the alternative to debtor financing is an overdraft facility. You could do a sale and lease back of assets, but depends. There's a lot of asset-backed lenders out there. So there's like 2 or 3 tiers of lenders, right? You got your top tier, your banks, and they will only touch you if they don't need to, if you don't actually need any money from them. The moment you need money from the bank because you're running a bit short on cash, they don't want to lend you, right? That's just the way banks work. So you then go to a second tier, and if you've done home finance, the likes of Pepper, for example, they're residential, but you have equivalent for commercial.
Yeah.
You then have a third tier, right? The third tier, in the second tier is sort of private credit. And then there's a version of private credit that charges you 20-25% interest per annum, right? And they'll take 80% security over or take full security over all of your assets. Depending on how desperate and how bad your books are effectively and how much risk there is in your balance sheet is to which level of credit of lender you could go to. But before you actually go, you know what, I'll go to a non-deck, you need to just go. So most commercial brokers will be able to give you access to each of those 3 categories of lenders. The higher the risk in the business, the higher the interest rate and more security they take. And I've got a question of why the interest rate have to be so high if you've got security over the assets, and they can't seem to answer that question for me. They shy away from that. They want to take and they value your assets at net orderly liquidated value. Okay. But a $25 million plant's valued at $6 million. I don't understand that she still charged me 12% interest on $7 million worth of debt. But you do it, right? You got to do it because cash is important. You got to fund it. And you will trade yourself out of it at some point.
Yeah. Just one other thing, just regarding sales, like I've found over the years, many businesses in a B2B environment have sales quotes sitting in their sales funnel, which no decision's been made on, and they don't follow up on their quotes a lot. What do you do with those?
That's just a quote, right? It means nothing.
They followed it up. They haven't got the sales, so it's a sales process problem.
It's a sales process problem, right? It's a sales conversion process. Look, and this is the alleviate or the collaborate piece, right? And I was having this conversation with Avon last week. If I go into a business and we do a root cause analysis and go, okay, there's a problem here. It's a people problem. I'm not your HR expert, right? But I'm a firm believer. I will put my hand up and tell everybody, I am not the person that is physically going to turn your business around, okay? The business is going to turn around. The people in the business are going to turn around. I'm the person that's going to count the money and tell you whether you're actually achieving your goals or not, right? Finance is a consequence of a whole bunch of actions. So if I go into a business and we go, oh, shit, you guys can't convert, because sometimes you don't have a conversion problem, you have an execution problem.
Yeah.
You got a leaky bucket. It doesn't matter how much you put onto the bucket, it just leaks out because you can't fulfill the client or they never come back. Then that's an operational problem to fix. I'm not your operational expert either, depending on what it is, right? So I will lean on people. So if it's a sales problem, I will lean on my network and go, I need someone in here to help them with the sales process, right? If it's an operational problem, it's an IT problem, like, and I met even when I was at All Trades Queensland, but my bosses couldn't make a decision at the time, right? So if it's an IT problem, I'll reach out to somebody and go, man, their tech is stuffed. We need something to fix it, right? If it's a debtor financing, if it's a finance related problem, I can help them with that. But there's other parts of the business that's not finance, then I'll bring somebody else in. And that's a cash conversion issue. It's a sales conversion issue, sorry, not a cash conversion issue. And you need to look at your sales process, right? When I was at, and I can probably say this, I don't really care, they can't sue me anymore. They had a little board up on the wall and they said, we've got 2,800 apprentices, right? And that's what made them the largest group training organization in Australia. Except the only problem was only about 700 of them were actually charged out on a weekly basis. But they would stand down their apprentice if they weren't being charged out, which was actually illegal, right? So they say, if you're not working, following week, you stood down. I'm not paying you, right? So they had payroll, they had full-time equivalents, or if you want to call it a headcount of 2,500, but revenue generating was 700.
Wow.
That's it, right? They did that for a long time until someone came in and said, no, you got to pay these people. But then she did the opposite, right? She said, you got to start paying these people. But then she didn't know how to fix the unproductive process or the unproductive side or the sales side. She didn't know how to fix it. So then now we were paying a whole bunch of people that weren't working. So it's a dynamic that even I could turn around and go, well, I can identify, I told you what the problem is. I can't fix it for you, right? We need to bring some experts in here to fix it.
Thank you.
Awesome. Paul Kennedy.
Good day. Hi. Thanks so much, Jack. Look, so many good things there that we kind of all know, but don't necessarily actually do ourselves. So thank you. That was excellent reminders. And you're so right. Cash is king, and P&L can forget it. I'm an accountant by background as well. So I absolutely agree with what you were saying.
Apologies if I insulted you.
No, not at all. And look, some people might think it's very hard-nosed, and it is, but it's also called survival. And something I've been doing recently, I didn't previously, I know all the things you've spoken about, but to be honest, did I practice them? No, I didn't. And I would often not charge a client for 3 months. I mean, how stupid could an ex-accountant be? But anyway, whereas now I have changed my approach, and when I'm doing a proposal, that's really what I'm getting at. It's like the honeymoon. The time to negotiate is right at the beginning, and I make all my new clients my invoices payable on receipt, and I get them to sign off on that. And in some cases where the contract is going to run on for a period of time, I get them to pay 50% up front and the final 50% on completion. And look, just simple little changes. I've been running my business now for 16 years, but those are 2 changes I've made just in the last year or so, and it just brings the cash forward. And that was really what your presentation was about.
Exactly.
The cash received forward and pushing the cash payment backwards. So thank you.
Absolutely. Accountants are notorious for billing after the work is done.
Yeah.
Right? And lawyers, anyone in that sort of professional services is notorious for paying after they've done the work. I have an online tax return business called Personal Tax Specialist, which Avon is helping me out with at the moment. And I this year basically turned around and said, no, I'm going to use a software called Practice Ignition. So the moment the lead comes in, I send them an email saying you're shortly going to get 2 emails, 1 to accept my engagement, and 2 to submit all your information. And when they accept my engagement, they have to put their payment details in there. When you get a copy of your draft tax return, you get an invoice automatically deducts. Thank you very much. Right now, I've been lucky. My clients, because I've got a gun to their head, right? I'm not going to lodge your tax return unless you pay me. But a lot of accountants don't do that. And technically, it's probably not ethical for me to do that. But my clients are okay. They pay. But there are a lot of people that just go, well, that'll just sit there, right? And sit there until whenever.
Absolutely. And I think the point I was trying to make was the time to agree on that is right at the beginning.
Correct.
It's when you're entering in, because they want your service. They actually need your help. So the time to negotiate and agree that with them is literally as you're signing them up as a new client. So they agree to it. And when you send the invoice off, just as per our agreement, payment is due on receipt or 50% in advance or whatever.
Yeah.
And I think you said there that accountants and lawyers are the worst for paying. I think you really meant accountants and lawyers are the worst for invoicing.
For invoicing, sorry, not for paying. Yes, for invoicing, right?
Yeah.
Notoriously bad for invoicing.
Yeah, we hate it. It's what we do, so we hate it. And we hate actually doing it for ourselves.
And it's really difficult having a conversation with someone, right? Like I've got a client that emails me or texts me, even better. I'll just text Jag. It's a really quick one for you, right? And I'm like, it's going to take me. And I now just sound, you know what? And I understand why lawyers and accountants charge by 6-minute increments now, right? Because I say, look, my charge out rate is $350 an hour plus GST. Divide that by 10, and every text you send me is what you're going to get invoiced. Whether it takes me 2 seconds to respond or 6 minutes, but I'm going to start charging it, and then you never hear from them, which is great.
Yeah.
I have to say, I don't have too many of those clients. I don't like charging by the minute. I actually, when I give them a proposal, I'll say that I'm going to charge you $100, $200 on average a month extra, right? And you can give me an email or give me a call if you want to talk about stuff XYZ. I'm not going to charge you extra.
So Jag, look, my final comment would be to say I so agree with you, but I'm just so bloody pleased I'm not married to you.
Yeah, no, my wife.
Yeah, you're tough.
Yeah, my wife just spends. My logic at home is the same as what Warren Buffett and the rest of them work with, right? They don't have budgets. They just make more than they can spend. I work in an industry where it's the other way around, right? Distressed business, they spend more than they can actually earn. So
yeah.
There's a very old sexist joke about somebody had Avon and Lisa, they had their house broken into. And interestingly, the only thing that was stolen was Lisa's credit card. But Avon's decided not to report it to the police at this stage because the burglar is spending less than Lisa ever did. With apologies to Lisa.
Nice one. All right. Just quickly, we did go a bit over time there, but I thought it was good and it was worthwhile. So thank you very much, Jag, for presenting tonight. That was excellent.